Hello everyone, and welcome to another episode of Bullsmart Investment Academy. In this series of a complete guide on mutual funds, we have discussed a lot about mutual funds, including the basics, structure, types, risk and returns. But now comes the most important part, which is the cost of mutual funds. Of course, if you are getting the benefits of expert management, liquidity and portfolio diversification, it will come at a cost, right? So the question is, how much do you have to pay for investing in mutual funds? There are two major components of fees that the mutual fund investor has to pay to the asset management companies. These are exit load and expense ratio. Let's understand both one by one. Exit load is the fees that the investor have to pay whenever they withdraw from mutual funds or redeem their units of mutual funds. All mutual funds have exit load, but the structure to charge the exit load can differ from each fund. The only reason why mutual funds charge exit load is because they don't want you to withdraw very soon. However, since withdrawals can be made at any time after the deposit, investors will have to pay an exit load to the AMCs if the withdrawals are made early. As we discussed in our previous videos, each category of mutual fund is suitable for different investment tenures. Hence, AMCs charge different exit load for different categories of mutual funds. Liquid funds and most other debt mutual funds do not incur any exit load. You can withdraw the next day after investing without any additional cost. Only a few debt funds charge exit load that you can check before investing in them. The majority of equity mutual funds charge an exit load of 1% if the investor withdraws within 1 year from investing. How this will be charged? It's easy. If a fund is having 1% exit load for 12 months, 1% of the total withdrawal will be deducted by the AMC. Now, another important component of fees in mutual funds that is most important is the expense ratio. This is the fees that most mutual fund investors are concerned about. So what is this expense ratio? In simple terms, the expense ratio is a measure that tells you how much it costs to run a mutual fund. It represents the percentage of a fund's assets that are used to cover various operating expenses such as administrative cost, management cost, and other related charges. Suppose there is a tree that grows gold coins as fruits. Imagine the tree giving you gold coins as the time passes by. But you have to hire a gardener to take care of that tree. This gardener waters it, cleans it, maintains it, but in return, he takes 1% of the coins that will be growing on the magical tree. This 1% taken by the gardener is the expense ratio, and the tree is a mutual fund. It is deducted from asset under management of the fund. For example, if the AUM of the mutual fund is 100 crore and the expense ratio is 1%, then 1 crore is the cost that the AMC will deduct every year from the fund to operate the fund administration and management. This deduction will be paid by all the individuals who hold the units of the fund. The expense ratio of the fund also depends on the size of the fund. Mutual funds with AUM of less than 500 crore can have a maximum of 2.25% expense ratio. The limit for AUM from 501 to 750 crore is 2%, 751 to 2000 crore is 1.75%, 2001 to 5000 is 1.6%, 5001 to 10,000 crore is 1.5%, and for the next 40 crores it keeps reducing by 0.05% for every 5000 crore increase. For funds with AUM of more than 50,000 crore, the maximum expense ratio is 1.05%. Investors must also note that passively managed funds like index funds and ETFs will have much lesser expense ratio as they are not managed actively by the fund manager. All mutual funds have regular and direct plans. A regular plan is the one in which you will be investing through a mutual fund distributor who will be guiding you and helping you with the investments. In a direct plan, you directly go to the AMC to invest with no intermediary involved. Hence, the expense ratio in regular plans is slightly higher compared to the direct plans. So that is all you need to know about the expense ratio. Apart from expense ratio and exit load, mutual funds do not charge any other fee from the investors in any way. We will be learning more about mutual funds in our upcoming episodes. Until then, happy investing. Investments in securities market are subject to market risk. Read all the related documents carefully before investing.